Monday, July 17th, 2023, Monaco 64, home of alternative economics and contrarian views. So gold-backed BRICS currency or not, I think everyone should be their own central bank. I don't believe this concept that it's a bad thing to be debanked. Banking is not a necessity. Banking with another counterparty, at least for your savings, I would say, maybe for daily payments and transactions, you might need a bank. But that's what we're going to look at today, despite what we're hearing of a possible and probable gold-backed settlement trade currency or gold-backed currency. You need to remain your own central bank. Before we go further, though, I'd like to thank all of you for your support of this channel. For those of you who are new to the channel, if you haven't subscribed yet, please do. Make sure you hit the notification bell to be notified of all my new videos. And yeah, make sure you share it with other people that you think could be interested in the topics that I cover. So before we go into why I think you should remain your own central bank, just go through some of the news this morning. We're seeing some headlines here about China's economy. In the FT, for example, it says China's economy loses momentum in second quarter. Difficulty in world's largest economy will put further pressure on global growth. They could be right. They're even concerned that China is flirting with deflation. But we know that deflation they're talking about is the fact that CPI or PPI are getting close to zero. And we know that deflation is really the decrease in the amount of currency and credit in the system. And I don't think China's anywhere close to deflation. And even if it were, all it does is make the currency stronger. Keynesians, of course, are for some reason scared of deflation. They don't realize that deflation is necessary in a free market economy because it cleanses malinvestments and it puts capital, it makes capital idle, but that idle capital will soon be redeployed. Keynesians are impatient, I would say. But you'd think with these headlines that China is doing really badly, but I've looked through the numbers and I'm not trying to defend any country, but I'm just trying to be more, let's say, objective. So we look here at the data. Second quarter GDP for China was expected, as per the economists that are surveyed on investing.com, was expected to rise 0.5, but it actually rose 0.8. The year-on-year number was lower than expected. It was expected 7.3, but it came out at 6.3, and it was higher than the previous number. It was 4.5, the previous number. And the other numbers we have here, we have industrial production. That rose 4.4% year on year. It was expected 2.7. And retail sales came out 3.1% year on year in June. It was expected 3.2. So that has come off from the previous month of an increase of 12.7. So I would take those Chinese headlines with a pinch of salt, especially when it's coming from Western financial institutions like the FT. The other one that I saw that is interesting is from the Epoch Times. And I think the article might have been taken from Reuters. And it says, IMF hints allowing countries to use Chinese yuan for debt repayment. I think that's very important kind of development, because a lot of the dollar defenders, the fiat dollar defenders out there, they always say, countries are indebted, they need dollars to pay off their debt. But if the IMF is hinting at allowing countries to pay off their debt in yuan. I think that's huge. That will mean there will be less demand for dollars. Another story that shows that there will be less demand for dollars is this one here, tweeted by Gold Telegraph. An official aware of the details said India could make its first rupee payment for UAE oil to Abu Dhabi National Oil Company. So there you go. The bilateral trade between those two countries is $84.5 billion. So less demand for dollars there. And with that, let's go back to the BRICS gold-backed settlement system, or a gold-backed currency eventually. I think that's probably what they're looking for. And the reason I've been covering this for many years, the demise of the petrodollar, and now what looks like this emerging BRICS gold-backed system, is that it will affect us in the West massively, because there will be less demand for dollars. And if you've done your homework and studied your history, you know that even the currencies within the BRICS, they're all derivatives of the dollar, going back to the Bretton Woods Agreement of 1944. Of course, the dollar was gold-backed until 1971, and the other currencies were fixed to the dollar, so that kept the system in check. But the country that had to keep the ultimate check, the US, they failed to do so, and that's why Nixon closed the gold window. So we've been under a fiat currency system, and all currencies in the world right now are a derivative of the dollar, because they hold dollar reserves to back their currency. So if the dollar is going away, all currencies are going to be in trouble. And I've been covering this even before I started my channel, when I used to write for a blog back when I still worked in the city. I did it privately, not for the firm I worked for, but back in 07, I was warning currencies, they're all sinking. Yes, that's why you shouldn't allow really the distraction of foreign exchange fiat currencies trading against each other and fluctuating against each other, distract you from the fact that ultimately all fiat currencies are going to be sinking. And that's why even a BRICS gold-backed currency, yes, it will suck a lot of capital or money out of the dollar system, out of the other major fiat currencies like the pound, the euro, and many others. But ultimately, do you really trust all the different officials in the BRICS countries? I don't. I don't trust politicians. And that's why ultimately you need to remain your own central bank. And what do I mean by that? Of course, a lot of you know what that means. And I think it was Jim Sinclair who coined this term. It means that you have your own reserves of real money, gold and silver, maybe some other metals that you might like platinum, even though I don't have platinum, even copper, I would say. So you need to keep stacking.
With rising inflation, bank failures, and massive layoffs across multiple sectors, the future of the economy remains uncertain. It's no wonder the central banks have been getting prepared by stockpiling gold. At ITM Trading, we have spent over 27 years building a team of seasoned researchers and analysts who can help you prepare for any financial crisis. Our experts are ready to provide you with proven strategies to safeguard your wealth and assets in the event of an economic downturn or currency reset, which is frankly inevitable. Don't wait until it's too late. Schedule your free gold and silver strategy call by clicking on the link in the description below. And
you need to use fiat currency only for paying bills. And what would be the best thing to happen for humanity, in my opinion? Well, the best thing would be for all central banks to be abolished and all legal tender laws to be abolished. And why legal tender laws? Well, because if something is money, and if the market and people use that as money, you don't need to have the government telling you that you have to accept something for payment. And that's why I think legal tender laws are also a bad thing. I think, of course, we're far away from that, especially due to the fact that central bankers and governments are pushing the CBDC agenda upon us. And that's another reason to remain your own central bank too. So the only reason why I cover the BRICS gold-backed currency is because it's going to affect us massively, because there will be less demand for our currency. So that's why we're seeing higher interest rates, and I think interest rates are going to go a lot higher than most people imagine. And again, yeah, don't be fooled. Don't trust the BRICS either, even though they're doing something that will challenge the current status quo. So with that, let's quickly look at where the markets are this morning. It's 7:45 a.m. London time. Yeah, Rudy and I are early. And we're going to look at a chart here of gold. And I know it's very tricky to try to forecast technical analysis sometimes. Not just for gold, but for all kind of asset classes. I mean, the technical analysis I've done for the gilts 2-year yield, that's worked. So who knows? This is just hypothetical, of course. But I noticed here that gold last week broke through this falling wedge formation. This is a weekly chart. Yes, gold ran up quite nicely last week. Towards the end of the week, though, it stalled. Seems to be quite a bit of resistance. It seems like they don't want gold to go above 1960. But be as it may, it looks quite bullish here that we've broken through the upside of this falling wedge. And this is a consolidation pattern. So if you look at where gold's come from the end of October, it was just above 1600. And it traded all the way up to a new all-time high. Some people will argue that it wasn't, but in my system, it traded up to 2082. So that was a big move. That was over a $400 move, almost a $500 move. So the way consolidation patterns work is that you have the consolidation. In this case, it was a falling wedge, which is usually bullish. And even then, though, there is a small chance that it breaks on the downside, but usually it breaks on the upside, which we've just done. So all you do is extrapolate the first move from the end of October to the end of April or thereabouts from the breakout last week, and it gives me almost $2,400 gold by the end of the year. And it's not in a straight line, because as you can see, the move up from 1600 was not in a straight line. At one point, we went up to like 1960, which is where we are now. And then we almost traded back down to 1800. So it won't be a smooth ride. And that's why they have the paper market, to make sure that gold remains relatively volatile, to put people off from buying real money. So just wanted to show you that. So where are we this morning in gold then? Well, we're down a couple of bucks, 1950, 350. The high has been 1960, not surprising. So that's the key level to keep an eye on. I think the high last week was 1964. And these are all spot prices, not futures. Silver is down about 17 cents at 24.78. We're right near the lows of 72. The high's been 24.98. Dow futures is down 51. The Nasdaq is virtually unchanged, and the S&P futures down 5. To the fiat currencies, to the currencies that are all sinking anyway, but we'll cover them. The pound is down slightly at 130.83. The euro is up slightly at 112.40. The dollar is down 0.25% versus the yen at 138.44. And the dollar is up a third versus the yuan at 7.18. Aussie dollar is down 0.4 at 68.10. The dollar is unchanged versus the Canadian dollar, 132.14. Kiwi dollar is down a third at 63.50. To the general commodities, WTI crude is down 1.5%, 74.24. Brent is down 1.4% at 78.60. Platinum is down about $9, trading around $9.68, and high-grade copper is down 1.5% at $3.88. I suspect traders and algos are looking at the Chinese numbers and reacting to it. There's talk, of course, that China is in a slowdown and in danger of deflation. I personally think that's a little bit overdone, but maybe it's part of an agenda to give an excuse for the Western central banks to kind of take the foot off the pedal in terms of tightening rates and and moving them more towards an accommodative stance. Let's just check the Treasury market. A gilt market is not open yet. The 10-year yield is unchanged. US 10-year, it's at 3.82. So they've been able to bring it back below 4%. We tested that, of course, about a week or two ago. The 2-year is unchanged as well at 4.75. So there you go. With that, I'm going to wish you all a very good day and a very good start to the week. Take care. Bye.